Hi there! Welcome to LGD Studios' Money Matters channel. Today, we're diving into a topic that could potentially be a once-in-a-generation opportunity to build wealth. You see, now might just be one of the easiest times to dramatically increase your net worth, but only if you know what you're doing. After all, there's a popular saying that riches are made in recessions, and it doesn't take much to realize that we're already moving towards that point. But before you panic, let's dive deeper into what's expected to happen over the next 12 to 24 months, the best benefits that you can take advantage of today, and precisely what you can do to make sure you're in the best position to make as much money as possible. But first, let's understand what you're going to be up against. To start, we need to talk about a recession. Recessions are generally accompanied by a significant rise in unemployment, a drop in wages, a loss in consumer confidence, and a decline in values across everything from stocks to food, energy, and services. These recessions can have long-lasting effects throughout the entire world. But what does all of this mean for you and your investments? Well, let's break it down. Number 1. Let's talk about stocks. As of now, all three major indexes are down between 20 and 30%. Analysts believe that we have another 20% to go from current levels. But history tells us that bear markets tend to do even worse during recessions, with an average drop of 34.8%. The absolute bottom usually occurs when we see capitulation across investors. That's when it's time to start the recovery and things begin to bounce back. I'm going to cover exactly how much you can make from this in the next few minutes. Number 2. Let's talk about real estate. While every area is different, housing declines on a national level are incredibly rare. However, the general consensus is that national housing prices are expected to decline by 7%, with some areas potentially seeing a 10 to 15% drop if interest rates continue to rise. Moody's Analytics suggests that the most vulnerable markets could see up to a 25% decline from their peak, including parts of Florida, Arizona, Idaho, and Southern California. So if you're looking to invest or buy a house, some deals might start to appear on the market. Number 3. Let's talk about cash. Until now, there's been a prevailing mindset that cash is wasting away due to inflation. But when every other asset is falling in price, sometimes cash can be the safest place to store your wealth. Even billionaire Ray Dalio admits that cash is no longer trash. In fact, many fund managers are holding the highest amount of cash since 2001. Citigroup even suggests that cash is the only asset that investors could use as a recession hedge. So, what can you do about all of this to make money during a recession? Here's what you need to know. Number 1. Scale back your expenses. Track your spending, cut back on unnecessary costs, and operate lean while reinvesting as much as possible back into the market. Have a plan for what you'd do if your income dropped significantly. Number 2. Hold on to some cash. Having cash on the sidelines can be a smart move for taking advantage of opportunities when they arise and providing peace of mind during turbulent times. In addition to an emergency fund, keep some cash on hand. I firmly believe that, although statistically your money is better off invested as soon as possible, there's something to be said about the peace of mind that comes with having cash readily available. In my own strategy, cash typically accounts for around 10 to 20% of my portfolio, depending on the time of year. This approach has afforded me numerous opportunities to seize great deals when they arise and allows me to rest easy, knowing that, regardless of what unfolds, I've got a financial safety net to rely on. Number 3. Protect your career. Your job is the best hedge against financial trouble. Invest in yourself, learn new skills, and be prepared for changes in your industry. Number 4. Invest long-term. Stay in the market and continue buying regularly. Dollar cost averaging is a proven strategy for long-term success. Number 5. Diversify your investments. Ensure that your portfolio has a mix of assets to reduce risk. The more diverse your investments, the less likely your portfolio will collapse if some assets underperform. In conclusion, this recession could be a once-in-a-generation opportunity for those who are prepared and take the right actions. It might not be easy, but it will be rewarding for those who stick it out. Thanks for watching, and be sure to subscribe for more investment tips. If you found this video helpful, leave a comment down below, and as always, happy investing!